Marcus Thompson drives for Uber in Phoenix. He's 35, married, 2 kids. Last month, he texted me a screenshot that made my jaw drop. His retirement account balance, $780,000. An Uber driver with $750,000 saved. Most people his age have $47,000 in retirement savings. Marcus has 16 times that amount. Here's the thing, Marcus didn't inherit money. He didn't win the lottery. He doesn't day trade or flip crypto. Marcus figured out the one secret that separates the wealthy from everyone else. And it's so simple, so obvious, that when I tell you what it is, you're going to feel stupid for not seeing it sooner. I know because that's exactly how I felt when Marcus first explained it to me. I met Marcus 3 years ago when he picked me up from the airport. We got to talking about money because honestly, that's all I talk about. I asked him the question I ask every Uber driver. What's your biggest financial worry? Most drivers say gas prices or car payments or finding enough rides. Marcus said something that caught me completely off guard. I don't really worry about money anymore. That stopped me cold. Here's a guy driving strangers around for $15 an hour telling me he doesn't worry about money. I had to know more, so I asked him to explain. And what he told me changed how I think about wealth forever. Marcus said, every paycheck before I pay a single bill, I buy something that makes me money while I sleep. Even if it's just $20. Even if it means eating ramen for a week. Think about that for a second. While most people pay their bills first and save whatever's left over, Marcus does the exact opposite. He pays himself first. He becomes a capital owner before he becomes a bill payer. But here's where it gets interesting. Marcus doesn't just buy any investment. He has one simple rule that goes against everything you've been taught about investing. When everyone else is buying, he's not. When everyone else is selling, he's backing up the truck. March 2020. The stock market crashed 35% in 3 weeks. People were panic selling everything. Financial media was calling it the end of capitalism. Marcus, he emptied his emergency fund and bought $8,000 worth of index funds at the bottom. His friends called him insane. His wife was terrified. But Marcus understood something most people miss completely. The best time to buy is when it feels like the worst time to buy. Fast forward 4 years. That $8,000 is now worth $19,000. A 137% gain while most people were hiding in cash, earning 0.1% in savings accounts. Now, what most people don't realize is that Marcus didn't have some secret information. He wasn't smarter than professional fund managers. He just did the one thing that separates wealthy people from everyone else. He went against the crowd. Look, I spent my 20s doing exactly what everyone else does. I followed conventional wisdom. I listened to financial media. I bought when things looked good and sold when they looked bad. I was broke at 29 with about $200 in my checking account and $23,000 in student debt. Then I met someone like Marcus, a contrarian who taught me that wealth isn't built by following the crowd. It's built by betting against human nature itself. Here's what I mean. Human beings are wired for survival, not wealth. We buy high because rising prices feel safe. Everyone else is buying, so it must be smart, right? We sell low because falling prices trigger our fear response. Everyone else is selling, so we should too, right? Wrong. Dead wrong. The wealthy do the opposite of what feels natural. They buy fear and sell greed. They become more aggressive when others become more conservative. They see opportunity where others see disaster. Marcus calls it his upside-down rule. When his gut tells him to do one thing, he does the other. 2022. Inflation hits 9.1%. Interest rates spike. Everyone's talking recession. Stock prices are falling every day. Marcus increases his monthly investment from $500 to $800. Why? Because shares are going on sale, and wealthy people love sales. Think about this. You get excited when your favorite restaurant has a 20% off special, but when stocks go down 20%, you panic and sell. That's not logical. That's primal fear overriding rational thought. Marcus trained himself to think backwards. Down markets make him excited, not scared. Because down markets are when wealth transfers from the emotional to the rational. Now, if you're someone who gets paid every 2 weeks but somehow never has money left over, this is for you. The problem isn't your income, it's your sequence. You're paying everyone else before you pay yourself. Your landlord gets paid, your credit card company gets paid, Netflix gets paid, your car loan gets paid, you get whatever's left, which is usually nothing. Marcus flipped the script. He pays himself first, every single paycheck, before rent, before groceries, before anything. He opens his banking app. He transfers money to his brokerage account. He buys shares of boring index funds. Then, and only then, does he figure out how to pay his bills with what's left. This forces him to live below his means. It forces him to find extra income when he needs it. It forces him to prioritize building capital over paying for consumption. Most people do this backwards. They consume first and build wealth second, which is why most people never build wealth at all. But here's the part nobody talks about. This strategy only works if you can handle being uncomfortable, because you're going to be uncomfortable a lot. When you pay yourself first, some months you'll have to get creative about rent. Some months you'll have to drive for Uber instead of watching Netflix. Some months you'll have to say no to dinner out with friends. The crowd chooses comfort over wealth every single time. That's why the crowd stays broke. Contrarians choose temporary discomfort for permanent wealth. That's why they retire at 35 while everyone else works until they're 65. Marcus figured this out at 28. 7 years later, he has enough invested to generate $3,100 per year in passive income. That's based on the historical average return of the S&P 500, which is 10.5% annually. He could quit driving today and live off his investments, but he doesn't. Know why? Because he's not done buying. Every month, the market gives him another opportunity to exchange his labor for ownership stakes in American businesses. Every paycheck is another chance to move from the wage-earning side of the economy to the capital-owning side. That's the real secret. It's not about picking the right stocks or timing the market perfectly. It's about switching sides in the wealth equation. Right now, every dollar you spend makes someone else richer. Your rent payment makes your landlord richer. Your car payment makes the bank richer. Your Netflix subscription makes Reed Hastings richer. The goal is to become the person receiving those payments instead of making them. And the only way to get there is to act like Marcus. Pay yourself first. Buy when others sell. Stay calm when others panic. Be contrarian when everyone else follows the crowd. Here's your homework. Tonight, before you go to bed, set up an automatic transfer from your checking account to a brokerage account. Start with $50. Do it before you pay any bills this month. Buy shares of a boring index fund, then forget about it. Don't check the price every day. Don't panic when it goes down. Don't get greedy when it goes up. Just keep buying month after month, regardless of what everyone else is doing. Be contrarian, be uncomfortable, be wealthy. The crowd will call you crazy. Let them. Marcus doesn't care what the crowd thinks anymore. Neither should you.